Well, that is quite the reversal on the daily time frame. We've printed quite a significant daily bar, and I'm just going to turn on the average true range indicator just to see how significant it is. You can see, based on price action recently, the average range of the bar is around $2,500, whilst this bar right here, it is still a bit early in the morning for me to do mental maths, so we're just going to measure it. It is $3,900. So it's not quite twice the average true range, but it's getting there. And we've still got an hour and a half until daily close. Now, the significance of that daily bar is, providing it closes around here, we've turned the swing direction back up by breaking on top of yesterday's bar high. We've turned the trend back up by breaking a previous swing top. We've turned the BX trender green on the daily time frame. We've got some pretty nice buying volume. Our up bar volume is higher than the down bar volume, which is a nice sign for bullish continuation. And obviously, we're back on top of that trend line breakdown zone. On the weekly time frame, not much has changed. This week is now an up week, I guess. If we can get 3 weeks up, it could potentially set us up for that lower high and get all the bulls super excited before we absolutely capitulate. On the monthly time frame, we're back on top of that 50% level of the bull market range from cycle high to cycle low. Sorry, cycle low to cycle high. Doesn't matter, it's a 50% level, whichever way you draw it. On the 4-hour time frame, you can see the price action looks ridiculous. Like, look at those green bars. And obviously, we didn't come down to test that -1 standard deviation band. And initially, I was a bit hesitant to long or short because the stochastic RSI was basically 0. We had so much selling pressure on the BX trender. And as soon as that BX trender started to get a higher low, we closed a higher low and we started to move up on the next bar. And I was like, you know what? I'm going to open a long position. I got in around $71,000 and I set my take profit for this smart money zone. As you can see here, I was anticipating an ABC correction. And obviously that is no longer valid because the B wave has now come on top of that wave 5 peak over here. And obviously I've got that turned off right now. So if I go over here and I turn it back on, wherever on earth it is, here it is, you can see. So this wave count here is no longer validated. This smart money zone, obviously we cut right through it, but you know, $2,000-ish per Bitcoin, can't really complain, right? So we're gonna get rid of that. Our volume looks very healthy. If I zoom out on that 4-hour time frame, you can see our buying volume in Monday's stock market session has exceeded the selling volume of this 27th of March, and we're pretty much on par with that. We're pretty much on par with some of the strongest buying volume that we've seen throughout this trading range. Now, that is a good and a bad thing. If we can break on top of this $76,000 high in the coming day or two, that probably would be a good sign. A strong volume breakout would probably confirm this entire range as accumulation rather than distribution. Accumulation rather than redistribution because we've moved down into it. Now, distribution and redistribution look slightly different in the first section of the schematic, your part A and B, because with distribution, price moves up into it, and redistribution, price moves down into it. Now, with that out of the way, we've got to obviously take into account the bearish side as well. Now, every other time in this range, we've seen such strong, such high volume on the buy. we've rallied into that +1, or in this case, we rallied into the +2 deviation on March the 4th, and we've pretty much rejected and come back down to fair value or to test the -1. Now, we've gotten that much volume, and we haven't even hit the +1 deviation band. Now, that could change in the next 4 hours, but for now, I am treating this rally with caution, and we'll just have to see how the next few hours plays out. On the 1 hour time frame, you can see we are 14 bars up on the 1 hour time frame. Now, I don't really give too much weight to the stochastic RSI or the BX trend on the 1 hour time frame, just because lagging indicators tend not to do well on really short-term time frames. I do use the divergences a little bit on the 1 hour time frame. You know, if we're getting a regular bearish divergence and we're hitting a +1 deviation band, I might take a bit of profit. And obviously, the opposite is true when we're coming into the -1 deviation, we're getting a regular bearish divergence, etc. But with that out of the way, let's just look at the price action. Almost every time in this range, when we've seen 7 or more bars up or down, it's marked either the top or bottom or pretty close to it. And 14 is just absolutely ridiculous. Like, we had a 10 bar down move here into a -1 band, and we saw a strong reversal straight into the +1 band. I can't even find another instance in this range when we've gotten 14 bars up. Now, this could be a sign of either buyer exhaustion or a strong high volume breakout. So, as Michael likes to say in his videos, we'll probably just have to wait and see where the dust settles. If price can continue riding between the +1 and +2 deviation bands as we grind upwards, that would be a pretty positive sign. But if price immediately snaps back underneath fair value, then that would probably be a sign of a exhaustion move or an upthrust after distribution if you look at it from a Wyckoff perspective. On the 15-minute time frame, pretty similar story, where chopping between the +1 and +2 band for the most part as we're grinding upwards. Now, typically that means we'll see a bit of a blow-off move that goes through the +2 band, which is kind of what happened in the last 15 minutes, and also very similar to what happened over here on the 8th of April. Now, typically what happens is price will come back to fair value. Being a 15-minute chart, it doesn't actually have to correct much to come back to fair value. It can kind of just chop sideways and the fair value band will catch up pretty quickly. So whether that happens at, 74K, 73.8 or whatever, we'll just have to wait and see. But I wouldn't look beyond that on the 15-minute chart. I'd probably see where the 1 hour and 4 hour corrections end up being. Now, if I draw a Fibonacci retracement here, we can just have a look from the recent swing low to high. We've got a 50% level at $72,500 or so. So if price can consolidate above $72,500, and obviously the higher it consolidates, the stronger the market. If we can hold above this peak here at 73,800, it would be extremely strong and set us up potentially for a even stronger leg up. Now, another thing to note is the US dollar in the recent session has retested the 33 fair value band from the underside and has now broken underneath it, and it looks like it's going to close the daily there. Now, on the weekly time frame, not much has changed. We're still above it, and you could see this as a weekly retest of support. You can see that fair value EMA band right there. We're just underneath it, but this week, obviously, we've still got 5 days to go. And 4 trading days. So it's possible that the US dollar, on the daily comes down to the -1 standard deviation band. Bitcoin and stocks rally a tiny bit more, gets everyone super excited, before the weekly time frame just reverses, US dollar goes up and crushes asset prices. Now, if I jump over to market data, you can see our long-short ratio is now 3% imbalanced. Oh, it's balanced itself out a little bit in the last 15 minutes. All right, but it still hit that 3% figure, and our short liquidations are really picking up. We're getting $338 million so far, and the day isn't even over. You can see the last few times we had that sort of liquidation, we typically corrected around, at $2,000 or so. So my theory that we come back to retest, 72.5 or so, probably isn't that wild. And you can just see, even if price doesn't correct and we do push a tiny bit higher in the coming days, it is still likely to correct at least sometime this week, just because we've seen that $300+ million of short liquidations. Now, it doesn't always have to happen. We had an exception on the 13th of March, but historically, looking through this trading range, when we've started to see those really significant numbers of short liquidations in that 300 to 400 million range, we typically will mark a top, a local top at least. And if I jump over to liquidation max pain, you can see I'm just going to come over to the monthly time frame. You can see, since we just fell short of long max pain the day before by about $100 and something, we immediately made our way towards short max pain. Now, if price falls just short of short max pain, so we don't manage to get to that 75k mark in the coming day or two, then that is a sign in itself that we will probably come back down and hit long max pain. Now, once this updates at the end of today or any time, I actually don't know when this updates, the long max pain number could change. We could get, 72.5k, which would line up very well with my analysis, or we could get something like 66, 67k. Now, potentially, this page could reflect insider positions. Smart money knows the next move before we do, and they position accordingly, and they know exactly where to take profits because that's where the most amount of retail will get wrecked. Who knows? But if I jump over and have a look at the liquidation map, you can see we've got a huge amount of longs piling in, and it's pretty obvious we've got a pretty sizable liquidation cluster at just over 70k, so as well as around 73.8 or so. So if we get some really strong consolidation and hold above 73.8, we could liquidate some late longs on high leverage and set us up for the next leg up. But I think it's more likely that we'll come back down and test either the 72,000 range or the $70,000 range even. If we do come down to that $70,000 range, I do believe on the 4-hour time frame it would probably be a 5th time breakdown, because obviously we had a failed 4th time breakdown here, and if price reverses, it would probably break through it, as this entire move up would be a failed swing, a swing failure pattern, sorry. So if we do take out the 70,000-ish liquidation cluster, I do think we're probably going to go lower. So I would probably say 72.5 is roughly my last line in the sand for another leg up. And obviously 73.8 is the highest amount of strength. If we have a look at the hyperliquid liquidation map, you can see there's still this short liquidation cluster around 75.5. So we'll just have to see if we manage to touch that. And before I go, let's have a quick look at the daily exchange volume. You can see there's still no volume, so I'm really sus about this rally. Like, if you have a look in our February rally when we got close to 100k, look at that pickup on volume. But now the market is just dead. So I really don't think anything significant is going to happen. Fear and greed is still an extreme fear. If I have a quick look at the FOMO finder, if it will load. Geez, this website always loads so slow. I honestly don't understand why. We are still in panic. So we'll have to see. The FOMO finder can kind of sit in panic for a while as prices continue to grind lower. Obviously, it's no longer a bull market. I remember back in 2024, 2025, it was like if the FOMO finder was in panic, you literally just bought the dip. And before I go, the last thing I want to look at is the Forex Factory. Now, the economic calendar, you can see based on my time, we've got US CPI PPI at 10:30 p.m. UTC plus 10, so 12:30 UTC time and probably 8:30 a.m. New York time. So that is obviously a potential major catalyst for the market that could set us up for a explosive move up or down. Now, obviously, there's heaps of other places where you can get fundamental analysis on how the market interprets CPI, PPI, how that will lead to rate cuts, inflation, whatever. But for now, I'm just going to stick to the charts. I do believe this rally is getting very overheated right now, and we should at least pause between $73,800 and wherever price does end up peaking. Or we correct down to around $72,500, build a base, and set us up for another leg up. Or if price breaches back underneath this trend line, which is at $72,500 as well, then this will be another swing failure pattern. So a failed move down, a failed move up. And the preceding trend, which on the higher time frames is still down, will probably continue. So watch the market closely, guys, and thank you all for watching. Please like, comment, and subscribe. Goodbye.